In this video, I'm going to talk about how to save for a down payment to buy your first property here in Canada. What's the minimum down payment requirement? What's the first time home buyer's plan? And lastly, how to check and build your credit score to get you one step closer to home ownership. Hey everyone, my name is Fawad Nissari with eXp Realty, and welcome to my channel and to this first time home buyer series where I'm going to be discussing everything that there is about buying your first property here in Canada in 2023. We will cover topics like how much money you need to buy your first home, how to get a mortgage pre-approval, difference between types of mortgages like the fixed rates and the variable rates, and then we'll talk about how to find your team to help you with your journey, and lastly, all the costs associated with buying your first property here in Canada and specifically in the Greater Toronto area. To ensure you don't miss any videos from this series and future videos, please consider subscribing and hit that notification bell so you're notified as soon as we upload our next video. All right, let's jump in. And first thing first, there are no 0% mortgages. Before the 2008 financial crisis, we did have 100% financing options, 40-year amortizations, cashback mortgages, etc. But in today's tough mortgage world, none of these programs exist. So if anybody's telling you otherwise, it's a complete scam, period. Okay, now that that's out of the way, let's talk about how much money do you really need to buy a house in Canada. Now, the minimum down payment requirement depends on the purchase price of a home. So for homes up to $500,000, you would need 5% down. And for anything over and above that, you would need 10% as long as you're below $1 million. Let's use an example to better illustrate this. Suppose you want to buy a property for $800,000, you would need 5% of the first $500,000 and 10% of the remaining $300,000. Essentially, you need $55,000 to buy an $800,000 property plus 1 to 2% for your closing costs. Now, if your down payment's less than 20% of the purchase price of the home, you will need to buy a mortgage loan insurance. Mortgage loan insurance protects the lender, aka bank, in case you cannot make your payment. It does not protect you. Mortgage loan insurance, also called mortgage default insurance or CMHC insurance. There's few companies that they provide mortgage default insurance. One is the Canadian Mortgage Housing Association, CMHC, Genworth, and Canada Guarantee. Just a quick backstory, back in the 60s, you needed to put 50% to get a mortgage. But around 1992, I believe the government introduced mortgage loan insurance by Canadian Mortgage Housing Association to encourage the banks to lend money to those who can't really put 50% or even 20%. Anyways, this could be a whole different video about default insurance, but all you need to know for now is if you put less than 20% down, you'll need to pay a premium that gets added on top of your mortgage. The premium is somewhere between 0.6% to 4.5%. That translates to somewhere between $25,000 to $35,000. The less you put, the higher the premium. The other important factor to consider is the maximum amortization period. Say, if you put less than 20% down payment, aka insured deal, the maximum amortization would be 25 years. But if you put 20% and more, the maximum amortization period is 30 years. What it does is it reduces your monthly mortgage payment by roughly $800 to $1,000 on a month-to-month basis on an $800,000 price point. Now that you know how much money you need to buy a property, now let's talk about how to get some extra money. The first time home buyer plan. So this is something the government introduced a bunch of years ago to help future homeowners with your first property. This is an interest and tax-free way to borrow up to $35,000 from your RRSP savings to buy a house. And if you have a partner who can also take out up to $35,000 from their RRSP without paying any taxes. Now, a few things to consider. It is a loan. You're taking into your own RRSP. You are required to pay it back within 15 years. You do have 2 years grace period, but after that, you would have to start paying money that you took in the form of contribution. Now, there are a couple of ways to really take advantage of your RRSP, and one of the ways is to expedite this by taking advantage of the company contribution. Let's say your employer offers to match your contribution up to 5% and you make $70,000. You would contribute 5% and your company matches your contribution dollar for dollar. At the end of the year, you contributed $3,500 and your company matched your contribution $3,500. Now that's $7,000, and if your partner did the same thing, assuming at the same salary, now you have $14,000 in just 12 months. If you do that for, let's say, 3 years, you'll have over $40,000 for your down payment. Lastly, check your credit before you do anything. Go to Equifax website to check your credit, to review your credit score and credit history. This is extremely important. The lenders look at your credit history, credit utilization, and credit score. Your credit score has to be a minimum of 680 to get a mortgage. Again, the higher your credit score, the lower your interest rate will be. If your credit score is low, go to your credit history and determine why. There could be a couple of reasons, really. You either missed a payment or several, or your credit utilization is over 30%. What is a credit utilization? Let's say you have $10,000 across all your credit cards. You would need to make sure the maximum you use every single month does not exceed $3,000. That shows lenders and banks that you are a responsible spender and don't rely on credit. That's how you can improve your credit every single month. Okay, now that you know how much down payment you need to buy your first home, first-time home buyer plan, and the importance of your credit report and credit history, on the next video, I'm going to talk about all the ins and outs of mortgage and mortgage pre-approval. Should you work with your bank or mortgage broker? What's the right type of product? And much more. To ensure you don't miss any future videos, consider subscribing and hitting that notification bell so you're notified when I upload the next video. Thank you so much for watching, and I'll see you on the next one.